Hello, welcome again to FAIRtax Power Radio. I'm Bob Paxton.
I'm Bob Scarborough.
And we are the FAIRtax Guys. And you will note through the magic of virtual backgrounds, I have been transported from my little Florida beach up to the Northern Lights in Alaska. If you're listening on the radio station or on a podcast, you're not seeing this, but I have a different virtual background every week. I just think that's kind of cool. That's better than just the plain back of my couch that I'm sitting on. So
That's right. And me, I'm just in the stately radio station studios in Piedmont, North Carolina.
And speaking of these stately radio studios in Piedmont, North Carolina, I will be flying up there to do our annual live FAIRtax Power Radio show on your radio station, WTOB, there in Winston-Salem. So if you are listening on the morning of October 20th, we're still on at 8 o'clock in the morning up there, right?
Sir.
All right. Well, we want to encourage folks. I don't know how many people get up that early on Sunday morning and turn on the radio. But we would love to talk to somebody if they have a question or a comment about the FAIRtax. We'll give them the phone number up there when we get there. But again, we will record that particular episode and play it back on our normal Facebook and YouTube channels a bit later. But those who are listening on the radio station that morning will get a chance to talk to the FAIRtax Guys live, and hopefully we can see you there. That's going to be fun. And then the next day we're going to go to lunch at Mr. Barbecue.
Yes, which is absolutely a requirement of Bob Paxton's visit to his hometown of Winston-Salem, North Carolina.
Indeed. Definitely have to go to Mr. Barbecue and check that out. But right now, we have got to check out what the Congress critters are trying to do to our tax code in our weekly Congress.gov segment here on FAIRtax Power Radio. And as you have figured out, this is really my favorite segment of the entire. We've been doing this is like 430 some episodes. I think this is maybe number 435, if I'm guessing right. I may be off by one or two, but that's close. But nobody else is watching the Congress critters but us, and it's rather amusing and sometimes rather maddening to see what they're trying to do to the tax code that we want to rip out by the roots and replace with a fair tax. So, you have a comment there, Kimosabe? We need to.
Oh, I was just gonna say, they're when you lift the rug off the roaches, they scatter, and so our show basically for the Congress critters. Literally shines the light of, in some cases, insanity, in some cases, just stupidity. And they're not stupid. I don't want to put that word in there because some of them are beneficial. But why the heck are we using the tax code to advance legislation that could easily be done in another way?
Yeah, we will remind everybody that the best of the best or the worst of the worst, however you want to categorize it there, will show up in the 2024 Tax Proposal Hall of Shame that we will go over at the very end of the calendar year, our last episode of the calendar year. We will always go over the Hall of Shame for the past year, see what the Congress critters have been up to. And we got several little goodies here already. I'm not sure we've got anything this week that's going to be Hall of Shame worthy, but we do have some stuff I'd like to tell you about, beginning with H.R. 9298. Now, I may need your infinite wisdom here to explain something to me here, Mr. Scarborough, but this particular bill from Representative Stubbe here in Florida to amend the Internal Revenue Code to treat qualified water competency. I have no idea what water competency is. You may have to Google that up for a second. But Representative Stubbe wants to modify the income tax code to treat qualified water competency and water safety lesson. I know what water safety lessons are, but if you spend money on water competency or water safety lessons, Representative Stubbe wants to declare those expenses to be deductible medical expenses. Get that. That'll just make you laugh. I almost put that in the Hall of Shame just for the sheer silliness of water competency. Water safety lessons are a qualified medical expense if this bill gets passed and signed into law.
Well, a water competency test assesses a person's ability to safely enter and exit the water
Oh, so they want to know if you can jump in the swimming pool without drowning.
and get out.
Okay. Okay, that kind of makes sense. But if you treat water competency and water safety lesson expenses, those will be medical expenses under this bill. That one may go in the HOS Hall of Shame.
The
What you think?
requirements are to appoint a qualified lifeguard at a local pool to demonstrate the ability to swim 50 meters in any stroke and tread water for 3 minutes. It's like the senior life saving class that you used to take, when you wanted to be a lifeguard at a pool.
Oh, okay. Well, I don't swim, so I never messed with that stuff. But
Float like a pea on water, yeah.
yeah, but to call that medical expenses, I think that is really stretching the definition of the word medical. We need to go on here. Let's look at our next one, HR 9275. This is from Representative, oh mercy, I'm not sure I can pronounce this right, Maliotakis, Mailliotakis from New York, to amend the Internal Revenue Code to provide a refundable tax credit for non-directed living kidney donations.
Non-directed.
I don't know what non-directed living kidney donations as opposed to directed living kidney donations are, but apparently they're trying to use the tax code to encourage people's behavior. I guess they're trying to encourage people to donate kidneys because there are some people like me who have kidney issues that may eventually need transplant. Of course, I don't have a real problem at the moment, but it's just kind of lurking there. But non-directed living kidney donations will get you a refundable tax credit if this bill becomes law. How's that?
Yeah, that's good. The non-directed living kidney donor is someone who donates a kidney to an unknown recipient.
Also,
Usually,
that
yeah, you just say, I'm not going to give it to Joe Smith. I'm going to just send it out there in the refrigerator. And it's usually through a transplant hospital, also known as anonymous, altruistic, or Good Samaritan donors. So that's who the non-directed living kidney donor is. So that's pretty good. That's a
I don't know if anybody says, "All right, just take one of my kidneys and give it to somebody who needs it." That's
I guess they're
I understand the concept of being an organ donor and that little notation on your driver's license that if you are ever unfortunate enough to lose your life in an automobile accident and the officer there looks at your driver's license, okay, you can harvest this guy's organs and send him off. That Okay, let's go on here. I'm going to keep digging in and to where I can never get out here in a second. HR 9263 to amend the Internal Revenue Code to establish a credit for investments in, here's something else you can look up, innovative agricultural technology. Now, agriculture is probably the second oldest business, second oldest profession on the face of the earth. But how are you going to agricultural technology? I guess it's always evolving as new things are invented. But they want to establish a tax credit for investing in innovative agricultural technology. I can say this one. This is Representative Kelly of Pennsylvania.
So it's like precision agriculture, vertical farming, farm automation, cellular agriculture, just any of those things would be considered innovative agricultural technologies.
Okay. So you can get a tax credit for doing that if this bill becomes law. One more. This is HR 9254. This is another case of, well, we're going to exclude some kind of income. This income doesn't count for tax purposes. This is Representative Frankel of Florida here to amend the Internal Revenue Code to exclude from gross income any judgments, awards, and settlements with respect to sexual assault or sexual harassment claims. So if you were subject to that kind of abuse at your workplace and you sue your employer and you win a nice big settlement, then Representative Frankel says, all right, that's your money tax free. Again, if this passes and is signed into law, that anything that you get as payment for or get a judgment for that particular thing that you may be victimized by, They say they don't want that to be taxable income, but it would be under the fair tax if you spent any of it.
Right, but you wouldn't get taxed. You wouldn't have to fill out a form. Probably properly notified in publication 17 to pay if you received a judgment payment for whatever your particular suit was about or argument with the court.
Okay, well, I tell you what, you just mentioned that we have not gone through publication 17 in quite a while. Now that we're no longer going through the fair tax book, which we've done doing for like the past 3 months, we may have to have another episode here before too long. Again, going through publication 17, all of the craziness. I still think the crazy one is if you steal stuff, you have to declare that as taxable income if you don't return it in the year in which you pilfered it. And that is actually in the tax. I don't know if Publication 17 counts as the tax code per se, but it's instructions on how to deal with the tax code. So there's got to be a provision in the tax code that says if you steal stuff, you've got to declare that as income. That is just the sheer craziness of the tax system that we want to yank out by the roots and replace with the fair tax.
There's a form for that, and it's listed in publication 17. Yeah. That and if you sell drugs and make income, you have to report that too.
Yeah, well, I got a feeling that neither of those cases are going to result in any revenue for the Treasury. Somehow, if you're a thief or a drug dealer or some other making your living by less than legal means, you're not going to disclose that information to the government on the tax form.
Yeah, I can see it now at your CPA, at H&R Brock or wherever you happen to get your taxes done. So now I've got this lawnmower that I borrowed from my next door neighbor. He doesn't know I have it. And if I go ahead and send it back by the 31st of December, am I going to be okay not reporting it on my income tax?
Yeah, so I know that I use online tax preparation software. I do TurboTax on mine. It asks you all kinds of questions trying to figure out what you need to report. It doesn't ask me. TurboTax has never asked me, did you steal your neighbor's lawnmower and not return it during this taxable year? So maybe, okay, we don't need to get any farther of that. We got about 15 minutes left of the program, and normally we kind of let Steve Hayes' chairman's reports that he writes on a weekly basis. They are published on fairtax.org. If you want to read the hard copy, I turn them into a video that's up on the FAIRtax YouTube channel. We can read that. But he came up with a chairman's report a couple of weeks ago. And I get advanced copies of them because Steve's a very intelligent man and he really knows his stuff. But he did not have the journalism teacher from hell that I had in high school. So I can polish his writing skills a little bit. So he sends me his chairman's reports, and I kind of do the editor thing on them and spiff them up a little bit as far as just the technique of writing goes. And he sent me this one. It was amazing. Where do you think you will find tax cheats? Would you expect to find tax cheats on the payroll of the Internal Revenue Service? And the answer, well, if you're working for the agency that is charged with making sure people pay their taxes, you probably are not cheating on your taxes yourself. Well, wrong-o. Steve Hayes uncovered some really incredible stuff that Senator Ernst had found out and sent in a letter to the IRS commissioner. As I was editing this for him, he wrote back and says, this would make a really good Fair Tax Power radio episode. So normally we don't steal chairman's reports as fodder for our program here, but this was done with his blessing. This was actually published on August 9th. If you want to go back and look at either the hard copy or the video version. Iowa Senator Joni Ernst demands Commissioner Werfel follow the law. Senator Ernst sent a letter to IRS Commissioner Werfel, and there are more than a dozen points there. And it says, it starts off by saying, Dear Commissioner Werfel, thank you for committing to in quotes here, trying to rebuild trust in the IRS by holding the agency accountable to taxpayers. Then she goes on to say, today is a great day to demonstrate the seriousness of that pledge by making the thousands of tax evading tax collectors at the IRS either pay up or pack up.
Yeah.
Get into some of the numbers here. These are crazy.
Okay, here we go. The Treasury Inspector General for Tax Administration completed an investigation at commission at
Senator Ernst's request here.
Ernst's request that has identified thousands of IRS employees who owe tens of millions of dollars in unpaid taxes. Collectively, more than 5,800 employees of the IRS and its contractors were found to owe nearly $50 million in overdue taxes. This from the letter from the senator to Commissioner Werfel of the Internal Revenue Service. Of the 30,
I'm just laughing at the absurdity of the entire process here.
Is of the 3,323 IRS employees with unpaid taxes, 2,044 owing more than $12 million were not on a payment plan. Of the 2,484 IRS contractor employees with unpaid taxes, 1,729 owing more than $17 million were not on a payment plan.
So you've got that much delinquency, and there's not even a plan in place for these people to take care of their tax bill. And it's incredible. This next number just blows my mind. Despite the IRS having the statutory authority to terminate employees who willfully fail to file tax returns or understate their tax liability, how many of them do you think were fired? 20. You're talking about thousands of employees owing millions of dollars, just 20 IRS employees found to be tax cheats were removed from the payroll as a result of what they're doing. You can't make this stuff up. I mean, this isn't supposed to be comedy, but you just think about it, it is just so insane and so crazy what's going on with the tax system and with the agency that is charged with enforcing the tax system. They're just not paying attention. And we'll say that none of this happens with the fair tax. You cannot, I'm sure there'll be some people that will try to beat the fair tax, just like anytime there's a tax, some folks are going to try to beat it. But it's going to be really, really hard to evade a tax that is included in the price of the things you buy at the grocery store or Walmart or anywhere else. You're not going to have thousands of people owing millions of dollars just because they decided, I don't want to pay it.
It's crazy.
Oh, mercy. I have not been sniffing nitrous oxide, but this is just so funny that I can't help it. Go ahead.
There's no oversight, and I would think there would be oversight. Maybe there is oversight within the commission, within the Internal Revenue Service, where you take somebody off. Really isn't a good idea for you to be owing all this money, considering you're working for the Internal Revenue Service.
Oh, mercy. Okay. But this is kind of crazy, too. Over 500. Again, this is from Senator Ernst's letter to the IRS. She notes that over 500 former IRS employees with tax compliance issues or conduct and performance problems, including criminal misconduct, sexual misconduct, inability to perform duties, fighting and assault, and unauthorized access to tax return information. We've talked about that. Over 500 people with that kind of stuff on the record have been fired and then rehired by the IRS. And of these, 282 rehires had multiple previously documented conduct and performance issues. And that is going on in the Internal Revenue Service. And the IRS, may I remind you, goes away under the fair tax. We do not have to put up with this stuff.
And that's the thing. Once you understand it, you'll demand it. Once you understand it, you'll demand it. There's a lot there. All of the government agencies are just rife with corruption and abuse of their offices and things. Government-wide, the Treasury Inspector General for Tax Administration found 149,000 federal employees owe an astounding, wait for it, $1.5 billion in unpaid taxes. That's that's across the spectrum of our government in Washington, D.C. Oh,
Yeah.
$1.5 billion with a B dollars.
Yeah, that expands people from just people working for the IRS to people working for the federal government, period. But $1.5 billion in unpaid taxes by people who work for the government. And a lot of these same people will tell you that, no, we can't get rid of the income tax. The fair tax isn't fair. The fair tax isn't right. There's all kinds of problems with that. We've got to keep the system we've got. And they want to keep the system they've got because they are getting away with not paying their taxes.
Yeah, I mean,
this is crazy.
It's the fox in the hen house kind of thing going on there, I think. Tens of thousands of these people are repeat tax cheats, failing to file tax returns year after year after year, and the number is steadily increasing.
Oh, mercy. But this next point she makes is just the zinger of the entire thing. There is absolutely nothing fair about forcing hardworking Americans to pay the salaries of tax evading tax collectors while the IRS targets lower income and middle class Americans with nearly 2/3 of the new audits. They say, hey, look, you're going after all these low income and middle income Americans, and you've got all these tax cheats on your own payroll, and you're doing nothing about it. Let's get rid of that and replace it with fair tax.
Well, they're holding up this shiny object over here, going, we're going to audit you, and yet they've got inside their organization a considerable amount of mischievous activities going on. So we're reading parts of this letter to IRS Commissioner Werfel from Iowa Senator Joni Ernst. This was dated July 29th of this year.
We got to see if she'll talk to us. If we can get her on a Zoom to talk about this, I'm not sure we can, but we might ought to try it.
You can see everybody's home right now. Everybody's on vacation. While the Internal Revenue Service warns, quote, this is out of Senator Ernst's letter. Quote, tax evasion is a serious crime punishable by imprisonment, fines, and the imposition of civil penalties. The agency is doing nothing to punish the criminals on its own payroll.
That sounds like a quote from Publication 17. Tax evasion is a serious crime punishable by.
You are supposed to uphold the crystal clear, you have a particular standard when you're in that position to to maintain a level of integrity, and I just don't see it happening there. And next one here, Senator Ernst in the letter to IRS Commissioner Werfel, you currently have the authority to terminate employees for willful violations of tax law, but are not doing so. Surely the irony and hypocrisy can't be missed here. Taxpayers are being forced to pay billions more to the IRS to audit America. Our tax dollars going to the agency to audit us, while the agency won't even collect the tens of millions of dollars in unpaid taxes owed by its employees. Section 1023 of the Internal Revenue Service Restructuring and Reform Act of 1998, public law, blah, 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 directs the Internal Revenue Service to terminate an employee for willfully failing to file a tax return or understanding tax liability, but provides the commissioner with the discretion to mitigate the penalty. So Werfel has the ability to mitigate that and work on it, but he's not doing any of it, even though there is a rule in place that basically requires the jettisoning of employees who aren't following the rule of the law that they're supposed to uphold themselves in
Oh, mercy. Senator Ernst continues, I'm proposing the Audit the IRS Act that will require regular tax audits of agency employees and prohibiting the IRS from hiring or continuing to employ tax evaders. I welcome your support of this bill that strengthens your ability to collect billions of dollars in unpaid tax. Do you think Commissioner Werfel is going to support that bill? I bet he won't.
He's probably on the list somewhere. You know, you never can, you just don't know. But yeah, this is a problem that's seeped into every layer of the bureaucracy. And it's probably not just with the Internal Revenue Service, but they think they've all got a free pass to kind of skate around the laws that the rest of us have. We're in Washington. We, you know, wherever we are, Omaha, or wherever, Pueblo, Colorado, or, you know, wherever the IRS office is. And, you know, we're the Internal Revenue Service. We don't have to do any of this. This is just, you know, paper for the minions out in the world, out in the country.
Oh, mercy. So she says, I would like to know what actions you're taking to ensure 100% tax compliance by IRS employees and contractors. What you bet she doesn't get an answer to that question?
I wouldn't doubt it. I mean, but you know, these are people, these are folks just like you and me who work for a living. They happen to work for a federal agency that has the power to extract money from us through blood, in some cases, squeezing the turnip, and yet they are totally disregarding the charge that they have in their own activities. That's the challenge.
That's just amazing that we've got that even goes on. It is to Senator Ernst's credit that she uncovered it and is trying to light a fire under somebody up there and fix that. And again, as we've been saying on the FAIRtax Power Radio for over 400 episodes, get rid of the Internal Revenue Service by getting rid of the income tax, and all of this goes away. Tell you what, it's just crazy. And I say we appreciate Steve publishing that as his chairman's report. If you don't get the chairman's reports, you can get them emailed to you. If you want to sign up for them at fairtax.org. Otherwise, you can just go to fairtax.org and read it for yourself, or go to the YouTube channel and listen to the recorded version of it. But yes, Steve really hit a home run with that chairman's report. We'll give him credit for that one. And before we leave here, we got to note something that I really kind of wish I didn't have to note. But I am really glad to have been working with you, Mr. Scarborough, for the past 3 years. But August 26th of 2021 marked the date that our buddy Ron Malero departed this earth. Unfortunately, he did not live long enough to see the FAIRtax implemented. But we continue to build on the foundation and the legacy that he left us. And we want to let everybody know, Ron, we still miss you. We sure appreciate the work you did for us while you were here. And we kind of wish we didn't have to note this particular point in time, but it would be we would be remiss if we didn't do so.
And a tip of the hat to his lovely bride, Elaine, who by his side spent countless days, hours, weeks advocating for the FAIRtax. Volunteers, there's an opportunity for everyone out there listening and watching today to be a part of this wonderful movement. You can go to fairtax.org and find out how to volunteer and contribute as we move forward with what we consider to be a worthwhile endeavor, and that is replacing the income tax with a tax on consumption, specifically the FAIRtax, under the House Bill H.R. 25.
Yep, and that is going to wrap up FAIRtax Power Radio for this time around. We thank you so much for watching, listening, and sharing the videos. Look forward to talking to somebody on the air live on WTOB on October the 20th when we go up there. But until we meet again, that's going to be it. I'm Bob Paxton.
I'm Bob Scarborough.
And we are the FAIRtax Guys, reminding you the FAIRtax is the only truly fair tax. And once you understand it,
we'll demand it.
So, how much will I bring home?
Go ahead.
How much do you make?
We'll just say 40,000. Okay, keep it simple. Throw out the deductions, all that stuff. So you got your 40K, right? Now the first 8,000 is going to be taxed at 10%. The 8 to 33,000 is going to be taxed at 15%. And the 33 to 40, of course, is 25%. So that brings your total to $6,345.
Okay, so the average is what?
16%. Okay, and then on top of that, you got Medicare, which is 1.5%, and then of course your Social Security, which is 6.2%. So actually, your new total is $9,405.
Which is 20.
23.65%. You're getting it. You're getting it. Don't even get me started on what the boss has to pay. He's got to pay a portion of your taxes as well, so you don't have to.
Right. And you?
Oh, you bring home every penny.